Hey everyone, welcome back to the monthly market commentary. I'm Brad Gotto, the founder and CEO of Fiat Wealth Management. Here with me as always is Mr. Tim Holland, the Chief Investment Officer for Town Square Orion. Tim, happy June and thanks for being here.
Yeah, no, it's good to see you. Happy June, happy summer. Big plans for the summer?
Baseball. That's my plans. It's I think we're 20 something odd games in already and we probably got another 50 to go. So
Oh my gosh.
we'll be doing a lot of baseball. Hope to get a couple rounds of golf in.
Yeah.
Maybe a little bit of water time because in Minnesota, this is what we wait for. I mean, we pay for this, so we might as well try to take advantage of it. But man, do we pay in the winter for a couple of good months in the summer. So hope to be outside as much as possible. How about you?
Yeah, no, good Lord giveth and taketh away when it comes to the upper Midwest and weather. So we're a family of four, Meredith, myself, Spencer, and Grace. We're going to head overseas in a little bit, south of France. Have never been, and then up to Paris. And
So you're starting in the south of France, then heading up.
yeah, we're going to fly into Nice.
Yep.
Had never been down there. Check out Provence, and then head up to Paris. And sort of like your guys, our son's big in the football. I know your guys are big in the baseball. So he's got a ton of lifting camps, and so he doesn't even want to go away because he doesn't want to miss anything. So this is it for us.
That's
And then
the definition of, you want to go to the south of France or you want to stay back and lift weights? I want to lift weights, Dad.
Yeah, I know. And I'm like, you got to come. And I'm like, it's okay. And he's like, oh, from this from the guy who tells me I got to get up early and have good habits. I'm trying to impersonate my son. Hopefully he never sees this.
Talking out both sides of your mouth,
Yeah,
Pikes.
now you're telling me to skip. I'm like, all right, we'll work it out.
Diversify. That's what you tell.
Yes, yeah.
See? You got to have some fun too. You got to mix in the fun, you got to diversify. You don't put all your eggs in one basket. Boy, you're the chief investment officer.
There you go. No one listens to me.
If I could give you one piece, my wife and I did our 15-year wedding anniversary in France, spent some time in the south of France, did Nice, which was wonderful.
Yeah.
We took a day trip to Monaco
Okay.
because it's close enough to do that. It's like
Yeah.
right up the road.
Must be stunning.
It is. Well, Monaco's 2 square miles, the whole country.
Wow.
2 square miles. But the richest people on planet Earth live there because there's none taxes. There's none taxes. So, it's just crazy to see. It's great. We're only there. Oh, it's crazy to see. So
I'll let you know. Thanks for the tip, and sounds like a great trip for you guys.
now the rest of this time is you giving tips to other people. So
Yeah.
if this is your first ever monthly market commentary, we do actually talk about real stuff. We like to have 3 segments. Segment number 1 is a look back over the last month since we did the last monthly market commentary, what happened and what's notable that we should be talking about. A look ahead in what's coming in the next month. What are some of the important data points or things like that or interesting things that are coming that we need to be paying attention to. And then we do end up with a data point that is worth discussing. And so with that being said, Tim, I'm just going to dive right in. Let's start with the look back. I'm calling this point the most famous marketing timing rule that rarely works. If you've ever heard the adage of sell in May and go away, that's been, I feel like, I don't know when that started. I don't know how many years old or decades old that adage is, but it's been around for a long time.
Yeah.
Well, it didn't work.
No,
Weird.
no.
Which is also weird, Tim, because most market timing adages don't work.
Yeah.
But that's a whole nother point for a different segment. But what happened in May, man? It was a good month.
Yeah, markets ripped. S&P, sort of mid-high single digits. Emerging markets did even better. Growth stocks caught a real bid. So you're right. Sell in May, go away certainly didn't work. From a big picture perspective, you had moderating oil prices as the ceasefire with Iran seems to hold or held or seems to continue to hold as well, even with some of the headlines we're seeing. And earnings. I think at some point you'll kick me off these videos because I think the only 2 things I ever talk about are the Fed and earnings. But earnings.
The second we get done with earnings season, it starts again.
I know.
It's never not here.
It's never not here. That's a good. I like that. I'm going to remember that. But earnings were up 28% for the S&P 500, and at the risk of being flip or cold-hearted about the state of the world or some of the stuff we're dealing with, earnings matter more than just about anything else. and you've got the most important index in the world growing earnings year on year, almost 30%. I don't know how you get in front of that without getting completely run over. And that's what May did. It was just incredible.
And I don't, because these are normally not hour and a half long made with segments. I don't want to like dive into this too deeply, but we should at some point probably spend some time on this in a meaningful way, maybe as a one-off. But
yeah,
when you really dig into the S&P and you dig into the earnings, what's really interesting to me is how much of this is being driven by this AI boom. I mean, you look at what NVIDIA's numbers as an example, which is now the largest company in the history of the planet. And their growth and I mean, it's bonkers.
I haven't. No, you're absolutely right. A lot of times, as you know, you've been in this business a long time. People sort of optically see a high price stock and then think it must be expensive, and they see a low price stock and it must be cheap. But obviously, the inverse could be true. You know, you could have a high price stock that's quite attractively priced and a low price stock that's very expensive because the fundamentals are so bad. And then you can also have a stock do very well, trade at a high valuation, but it's justified because the earnings and the financial performance keep catching up with the price and the multiple. And I haven't looked at the PE on NVIDIA in a bit, but at one point it was trading at 22 times earnings and growing earnings almost 2 times that. Once sort of Wall Street plugs in the new numbers, the multiple goes from here to down there because they keep growing earnings like that. But I'd be happy to have a one-off and kind of dig into price earnings, multiples, forward earnings, the different ways folks in our business approach valuations.
Yeah, and so looking at May, obviously you brought it up already, phenomenal month for the markets, for the S&P, the major indices. You touched a little bit on emerging markets and some of the growth we've seen there as well, the positivity in the month of May.
Yeah.
What was really interesting to me, and it's the thing that everybody's watching right now, every single day, every little movement is making a headline, is oil.
Yeah.
And we saw, in spite of the continued volatility and a ceasefire that's not really a ceasefire, but it is kind of a ceasefire, but we don't know if we're ceasing our fire, and nobody knows what's going on.
Yeah.
But in spite of that, in May, we also saw a decline in oil prices. What's driving that? Why is it going down?
I think, the oil started the month of May per West Texas Intermediate, our benchmark, I think at about $107 a barrel, ended, or 105, ended May at about 88, and it's popped a little bit. It's back up to 96. So I think one of the most fascinating things about what we do in the markets is that the market's always trying to understand where the puck is headed. Right? And prices today, to some extent, not just reflect defense today, but future or expected events. Those could be earnings, those could be revenues, and the price of oil could be supply demand. So I think since oil was at 112 at its peak during the worst of the conflict, it's at 96 now. I think markets are pricing in some ongoing moderation between the conflict between the U.S. and Iran, and a reopening of the Strait, and not a full-blown energy crisis. Now, we may still get that. The markets could be wrong, but I don't think one could argue that the markets expect things to get worse than they were when they were at their worst, if that makes sense. And futures markets for crude oil, if you look further out, expect prices to settle in somewhere in the low to mid $70 range. So that's my best guess on why oil is pretty far removed from its highest point during the worst of the war with Iran earlier this year.
And I don't want to be flip about this either. And, in a war and what that means and all that kind of stuff. But again, when we're talking just pure the investment side of things and looking at things like oil, what's interesting to me is it seems to me, at least the reading I've done and the things that I've learned, the second that strait was closed, it seems to me this is less painful for us than it is the rest of the world. And that the longer that this goes on, it actually just gives more tailwind to the United States because we are energy independent and because we ship out so much oil. And a lot of these other countries that it's affecting rely on the oil from the Middle East and in that region. And so this is just kind of giving us even more of a head start in some of these areas.
Yeah.
The longer this goes on. And so again, there's definitely negative to it. It's affecting people, and war is never good from a humanitarian standpoint. But when you talk about things that we're watching and things that we're paying attention to, it is interesting to me that the longer this goes on, the more we seem to kind of be in the driver's seat as it relates to energy prices and all the trickle down effect that has, because obviously energy is at the core and at the center of a lot of economic data and the way that economies tend to move. So,
That's all right.
all right. Moving on to our second point, Tim, which is a look ahead. Now as we record this, I don't even know what day it is. June 3rd. June 3rd. Actually, this is pretty good. We usually don't get together this early.
Yeah.
How did we get this done?
We're getting faster as we get older. I don't know.
Man,
You would expect,
probably AI. It's got to be AI.
well, you would think it would be the faster because heads here AI, you would
This isn't even really me. This is the AI. I'm not even really doing this anymore.
look good. This is AI, and I still look terrible. So
I was just gonna say, this is AI me. I need a better AI. I'm on the old version of Grok or something.
you and me both.
All right, so a look ahead. I love alliteration, so we're gonna call this
yeah.
politics, Powell, and payrolls. Politics, Powell, and payrolls. Those are the three things that we're paying attention to from a political perspective, payrolls perspective, and Powell. I think a lot of people will pick up on that one. What are those three things that we're watching, Tim?
So politics, June is the busiest month at the state level for primaries. So a high-profile one was for the governor of California, the mayor of Los Angeles. I think that was yesterday. But 15 states across the country hold primaries in June to figure out who's going to represent what party when they go for the U.S. Senate, House of Representatives, and the like. So it's going to be a very busy month. Politically, which will help set the table going into July for the midterm elections. And we're going to be doing a couple of videos through the summer with a DC-based policy analyst going into the election to kind of look at the polls, which way the proverbial winds are blowing. Will the Republicans hold the Senate, lose the House, and then do something after the vote to kind of dig into the policy implications of the election. But it's going to be a busy month. And then I think once we get through June, if Iran does kind of settle down and move off the front page, I think it's going to be all midterms all the time until we get to November. Just because the two parties in our country are just so, no one's getting along with anyone. And they're both getting ready to rumble. And I think it's going to be all politics.
I can't wait for it. I can't wait for the commercials and for...
If you're the swing state, it just doesn't stop. So there's that.
I'm going to alienate people when I say this. I'm going to take a risk in saying this, I guess. The attack ads in that area. Who is that for?
Yeah.
Because I've never once seen an attack ad and had it make me like the person that's running the ad more.
Yeah.
Usually it's just like the disdain I get for the person doing it because that's the way they choose to try to win.
Yeah.
It's like I as a coach, I was just, it makes me think of, I was just on the baseball field last night coaching a game for my 13-year-old son. Well, not last night, 2 nights ago, we ran into a couple situations where the other team just had really bad sportsmanship.
Yeah.
And I kept trying to, pound this into my 13-year-old and the rest of the team that we don't respond.
We don't do that.
You don't fight fire with fire. You rise above, and in spite of the way they choose to play the game or have sportsmanship, we're always going to come out, with the sportsmanship that we talk about all the time. And so I just don't know. Gosh, now you got me all riled up. We're talking about all this, the table's getting set and all these things are going to be happening. And now I just know I got to listen to all of it.
I didn't mean to get you riled up, and I'm no expert when it comes to campaign ads. I think the idea with really nasty negative ads, and it's interesting how they try and they run ads and not be anywhere near associated with the ad, right? But then they have to come on now and say, I approve this ad. They passed that law however many years ago. I think they're just looking to dampen enthusiasm for the candidate they're attacking at the margins just to keep a few people at home. Because I think we're so closely divided at the national level, at least, that just a small shift one way or the other. And I think that's what they're intended to do, but I'm guessing a little bit as well.
How about Powell? So we talk politics. How about Powell?
Yeah, Powell. So we've got our first Fed meeting this month with Kevin Warsh as chair, but Jay Powell is still on the Fed as a governor. And that hasn't happened, I think, since the 1940s, when a former Fed chair stayed on after his term as Fed chair was up. Jay Powell has talked about not wanting to leave the Fed until he's sure that the Fed's independent and secure. Any investigations in the Fed are clearly in the rearview mirror. He's also talked about keeping a low profile. Kevin Warsh is the chair. He's going to respect that. But this is sort of uncharted territory from a political point of view for the Fed internally. And like all institutions, the Fed is a political institution. So Kevin Warsh has got a big job, and he's dealing with a set of circumstances that no Fed chair has really dealt with in 80 years from a governance point of view. Plus, he's got inflation that's a little sticky and a war in the Middle East, and it's a lot.
Yeah, nothing going on.
For lack of a better term. Oh, and then finally, payrolls. We'll get the May jobs report this Friday, the 5th. The last two reports have been better than expected.
Yep.
Hopefully we'll go 3 for 3. Because I don't want to say anyone lose their job or not be able to get a job, but you don't want to see sticky inflation and the labor market rolling over, because, man, that's a really tough spot to be in if you're the Fed. Whereas if you think the labor market's in pretty good shape, even if you'd like to cut rates, but you can't because inflation's elevated, at least you don't have to worry about the American worker being able to find a job. So all jobs reports are pretty important. This is a big one, given the macro environment, and it's also the first one before the Fed meets under Kevin Warsh's chair.
Yeah. I think, what makes me think about is I talk about this a lot. There's always reasons you could point at our economy or the world as a whole and give reasons why you shouldn't be invested, why you shouldn't stay invested, why you should be worried, why you think the next recession is right around the corner, or whatever it may be. That's always true. A lot of people right now would tell you it's more true because these facts are crazy and, all this stuff. As many of these things, like worried about jobs, worried about inflation, got a war going on, things of that nature that are going, it's interesting because we're at an inflection point. We were at an inflection point 30 years ago with the internet.
Yeah.
We were at an inflection point 100 and whatever years ago, without me doing the math in my head right now, on the Industrial Revolution, and when that all started to change. And now here with AI. I just wonder if it's going to change the rules of the game a little bit. And so a lot of these things that in a normal economy would be tailwinds enough to kind of drag the economy down, potentially into a recession, if it's going to insulate us enough because of the growth in one particular space and our opportunity as a country to kind of be on our front foot with this, if it's going to insulate us from, some of these micro and macroeconomic trends that would normally lead to, or you would say this is, recession territory. So.
Yeah, it's a really good point. And you've been in this business for a long time. And they always say the most dangerous words in our business are, it's different this time. Because then you justify really silly prices and you buy some more, or the world really is going to end and you sell when you shouldn't. But the economy obviously does clearly evolve. And the pillars under the economy ebb and flow and grow and contract. And AI, I think, is one of those technologies, one of those points in time that will be an inflection point, as you point out, Brad. And I do think the spending that's going on there has been a huge boost to GDP in the face of sticky inflation, high energy prices, and a war in the Middle East.
Yeah, for sure. Yeah. Well, moving on to the data point that's worth discussing. I'm going to go a little off topic here, a little off script. At least in my 20 years in this industry, the most anticipated, maybe this is recency bias, but I don't think it is, the most anticipated IPO in my 20 years is about ready to happen.
Yeah.
With SpaceX.
Yeah.
I've never gotten more questions about an IPO in my career. I'm getting all kinds of questions about SpaceX and their IPO. And Elon Musk is obviously a lightning rod of a human being. A lot of people love the guy and think he's a genius. There's a lot of you that think he's off his rocker for a lot of different reasons. But here's the data point, and then I just want to talk about this IPO a little bit because we've got some information on it recently. So, according to my research, Elon owns roughly 42% of SpaceX.
Okay.
If they get the IPO target that they're after, 1.75 trillion, that adds 735 billion to his net worth.
Yeah, he's going to be the world's first trillionaire. I think
It's unbelievable.
It's as it can't even fathom.
I'm not even saying I agree with the fact that there's a trillionaire out there, or that we should even have trillion. But the amount of value that what you can't argue is the amount of value that guy has brought to the world in a lot of different ways. Now, should he be a trillionaire? Should he make the decisions he does? Should he treat people? Besides the point, SpaceX. What information have we gotten recently, and what's going on with this?
So to your point, SpaceX has filed to go public, and we never recommend individual stocks or buy, sell, or hold or anything. But to your point, it's the most consequential IPO in a generation, maybe a couple of generations. They think, to your earlier point as well, Brad, when it comes public, which I think it's going to price a week from tomorrow, a week from Friday, so the 11th or 12th, somewhere around 1.75 trillion in value. I think it's three primary businesses. It's Starlink, which is a satellite service. It's X, the old Twitter, and then it's SpaceX, sort of cargo payloads into space and low orbit satellites and the like. Growing pretty quickly. I don't think it's a money making proposition right now in total, and it's got a decent amount of debt as well. But it's also run by, again, like or dislike him, I think the most consequential businessman of the last 50 years. I mean, I think he's that impactful. And so we've gotten a lot of questions. Should I buy SpaceX when it lists? And we don't give individual stock advice, and I would not bet against Elon Musk, like or dislike him. But a couple things, a lot of wealth tied to SpaceX has been created in private markets, not in public markets. So it's finally available. It will be available to we individual investors. So that's something to keep in mind. We've seen some research where most IPOs, either small cap stocks or large cap stocks, tend to underperform their respective indexes over the first 3 years of their public life. They often pop when they first price, but then they often struggle. So again, no, for certainty or for sure, not know what's going to happen with SpaceX, but something else to keep in mind. But it also looks like the major index providers, NASDAQ, S&P, are going to be tweaking their index inclusion rules to let SpaceX into those indexes a lot sooner than SpaceX would have been able to be included under the old construct. So one way or another, if you own a large cap index, you're probably going to end up owning some SpaceX, which then begs the question, people are worried that it's going to be an overhyped stock. It'll pop at when it prices, but it'll then collapse. It'll pull the market down. My 2 cents is based on what they're going to be selling to the public and what would likely be a nominal inclusion in these indexes if the index providers change their rules. I don't think it's going to be that big a deal for the broader market. I think it will be a big deal for the folks who invested early in SpaceX, and unfortunately, that's not me.
The business, the three businesses that are included. I mean, could you ever have thought, like, in 2026, it's 20 years, 2006, which market's ripping. 0809 hasn't happened yet. That somebody would tell you there's going to be a company in the future 20 years from now where the three primary lines of business inside of that company are going to be satellites, low satellites for internet for everybody in the situation, payloads to space,
Yeah,
moon,
yeah.
or possibly to Mars, and a social media company platform. I mean, you can't even make it up. That doesn't even make, and now there's a lot of talk. I'm not saying this is true. It's just talk about the fact that he plans on rolling Tesla into SpaceX in the future because of the symbiosis between a lot of the things that they're doing. It's a lot more symbiotic than Twitter or X, as you go. So just very, very interesting. It's just a fascinating story, fascinating character, positive out and neutral. And it's just going to be fun to watch. But as an investor, you made the point a couple of times, we don't give individual stock advice like that. There's a difference between investing and gambling. And I will be one of those people through FOMO that would, if same money I would maybe take to a blackjack table, if you want to put a couple bucks down on blackjack and have a little fun and see what happens, as long as it's not affecting your overall financial plan. Let me put that disclaimer out there. Yeah, it's entertainment. The same as going to the movies. I don't know. Like, I just think it would be fun to have a couple of dollars in it just to say that you owned it. But I agree with you. Long term, typically what you said is, you get this big pop, you see this big lag, and then things kind of level out over time.
Yeah.
Long-term viability of the company and what they're doing, it's going to be very interesting. There's a lot of, I've done all the reading on it. There's a lot of precious metals that exist on the moon that we use every single day on Earth, and the first person that can figure out how to get them back here and use them is going to be a very, very, very wealthy person.
Yeah.
It seems ridiculous to me that we're ever going to be able to do that, but it's not going to be.
It's a science fiction movie. Yeah. But maybe that's where, science fiction until it becomes reality. It's just, it's pretty incredible, some of the stuff they're talking about.
Yeah.
Which, if nothing else, and again, the world's not perfect. This country's not perfect. Some of the stuff we're talking about, to your point, would have been unimaginable 20 years ago. If you believe on balance, growth, innovation, even disruption, ultimately is a good thing for America and humanity, then we're still doing something right. Like or dislike the person that we're talking about. I really think of it. I really think that's true.
Yeah. Be an investor. Don't be a gambler, generally speaking, especially from your financial planning perspective. This is going to be very, very interesting to watch. And to Tim's point, I think the thing that's important for all of us to understand is whether you want to or not, honestly, if you're a well-diversified investor and you hold any of our major indices, you're going to end up owning SpaceX most likely in the pretty short term anyway. So it's important to keep that in mind as well. As always, Tim, thanks for being here. I appreciate your time. I appreciate your insights. We're never looking for things to talk about. The world never ceases to give us big, massive headlines and things that we have to be paying attention to. And so as long as they keep doing that, we'll be here. Thanks for joining us, everybody. If this is your first ever monthly market commentary, I appreciate you being here. We do this every single month. If you did pick that up in the name, if that wasn't obvious. If you have any more questions for us or what we're doing here over at Fiat Wealth Management, you can find everything you need to know on our website, fiatwm.com.